What's going on YouTube? CoinCapital here, and today in this video I'm going to tell you why I think NIO right now is a great buy opportunity, especially with current prices and the dip that we've seen. But this all depends on the market itself, because they're going to go down and up based upon yield rates for bonds, as well as the market as a whole and the volatility right now, especially because they're tech and EV. But other than that, I think this dip that we've seen so far, coming from prices upwards of $60 a share to about under 40 right now, is a great opportunity. You got to buy the fear, and the reason for this is because on Thursday, shares of NIO entered into oversold territory, and this was an RSI reading of about 29.7, and this was at the low of $37 a share, and the current RSI for the SPY, S&P 500, is 49.2. So if you look at this RSI as well as other heavy selling indicators, we can see that they're oversold, and they could definitely recover in price. They're a great company. If you don't know NIO, they're a Chinese automobile manufacturing. They're headquartered in Shanghai. They specialize in designing electric vehicles. They were also involved in the Formula E Championship for car racing, and they have the single-seater all-electric racing series as well as their SUVs, but they missed earnings quite a bit. That's kind of the reason for the dip, as well as the volatile market we've seen with Powell's speech and such with that. But if we actually look at the earnings themselves, they were an ADS of negative 1.05 versus the negative 0.71. So this is a 1 yen, and that's what analysts expected, and they missed that. They reported earlier they rose year over year with vehicle deliveries, which is a great thing, and the revenue was missed by an analyst expectations, but revenue over the year has been at around 720 million. That's 2018, but when we look at 2019, it's a bit lower than expected. They were as high as $67 a share, and their revenue rose over 146 compared to the same 3-month period a year ago over the previous quarter, but that's a great thing as well. But if we see, they did miss a few things. There was 6.7 billion estimate. That's not in US, but they missed by quite a bit, and it's not that big a deal, honestly. I think because this company's still a growth stock, but I think right now is a great opportunity to buy the dip. But we got to see how the market does itself, because they still have had a 52-week low of $2 a share. They really ramped things up recently, but with great cause. I mean, they're still at high PE, but there's a lot of people backing this. There's great supports. They have significantly increased the number of vehicles over the past couple of years. Fiscal year of 2018, they delivered approximately 11.4 thousand vehicles. That number doubled to 20,000 vehicles for fiscal year of 2019. But for the first quarter of 2020, it was down 3.8%. Not a big deal. That was with COVID. They rebounded a lot. And for the this third quarter of 2020 is 111% over fiscal year 2019, and that beat analyst expectations, but they didn't beat this time. But I think right now is a great opportunity to buy the dip, and I'd look into NIO as well. But that's really all I'm going to talk about today. It's a pretty quick report video on NIO and why I think you should buy the fear. But other than that, I really like this stock. I like the company. I think out of all EVs, speculatively, they have the support that they need. They have the numbers, and they're being bought. They're a legitimate company. But other than that, I'm not a financial advisor or expert. Take this video as entertainment purposes only. This is not financial advice. Thank you so much for watching. Make sure to like, follow, comment, and subscribe. Check out my TikTok at coincapitalyt and my Instagram at coincapitalyt. Thank you so much for watching. See you guys in the next video.